Page 26 is where I give you some instructions for approaching a cash flow problem. I really want you to look at that carefully. I only created that like a semester or two ago because in a study session I had this one student who kept wanting to have a cohesive approach for attacking one of these problems here. So I came up with this, and really what is right there, I don't plan to discuss it per se on the handout, but that's how we're going to approach this problem right now. We are going to go step by step. If you kind of put that to the side, you're going to see I'm following all those same steps right now. So the first thing that tells you to do is to determine the increase or decrease in our accounts on the balance sheet. The second step says to identify on what section of the classified balance sheet that account would appear. So with cash, we had a $3,000 increase, and cash is a current asset. Accounts receivable increased by $5,000, it's a current asset. Merchandise inventory decreased by $2,000, it's a current asset. Machinery went up by $8,000, that's part of property, plant, and equipment. Accumulated depreciation increased by $3,000, that's part of property, plant, and equipment. Accounts payable went down by $4,000, that's a current liability. Salaries payable went down by $1,000, that's a current liability. Notes payable increased by $2,000, that's a long-term liability. Common stock increased by $9,000, that's part of my stockholders' equity. PIC in excess of par increased by $4,000, that's part of stockholders' equity. And my retained earnings increased by $1,000, part of stockholders' equity. At the top, draw a big box or such, or put a star right there by the $3,000. This is my check figure. I really think statement of cash flows are fun to do. They're kind of like a great big jigsaw puzzle. And when you get to the very end, hopefully you've got one opening in the puzzle and you've got one piece that fits exactly. And that is this $3,000 check figure. When we finish my statement of cash flows, I should add up the total for my operating section, my investing section, and my financing section, and it should add up to a $3,000 increase in cash. So that's my magic number. That's my check figure. If I want to see if I got it right, when it's all said and done, I'll add these up and see if I come up to a $3,000 increase in cash. I've given you an income statement. Is there anything on that income statement that you think I'm going to need on my statement of cash flows? I'm going to need to know depreciation expense. Very good. Is there anything else that I'm going to need to know? Net income. Very good. So that's all I'm going to need from the income statement. Now, in this case, I gave you the whole income statement, and we just had to look at it and pick out what we needed. In other cases, for example, they might not tell you what your depreciation expense was. They might give you the beginning and ending balance and accumulated depreciation. So let's just kind of review that. If they didn't tell me depreciation expense, what makes accumulated depreciation go up? The depreciation expense adjusting entry that we record. Remember that Chapter 3 adjusting entry, debits depreciation expense and credits accumulated depreciation? That would make the accumulated depreciation account go up. What makes accumulated depreciation go down? When we dispose of an asset that has some depreciation, that makes my accumulated depreciation go down. So what if they told you the beginning accumulated depreciation? They didn't tell you depreciation expense. They told you the depreciation on the assets you sold, and they told you the ending. Could you work backwards and figure out the amount of depreciation expense? Yeah, that wouldn't be very nice, but I'm going to mention that to you because sometimes in homework they're going to do that. Net income, the way they tend to phrase this, students get really confused on their homework. The way your book normally says it is, in this case, they would say there's a $4,000 credit to retained earnings for net income. What they are discussing is the closing entries. Remember REID, the third closing entry, closes out income summary to retained earnings. They're telling you that's the amount of net income. Okay, make it a little bit confusing with their wordings, but just be prepared for that. So in this case, really all I need of that is depreciation expense and net income. Notes. Cash dividends of $3,000 were declared and paid. Now I'm kind of keeping this one simple. I'm saying we declared and paid the same amount. Is that normally the way it's going to be? Normally not. We declare a certain amount, we pay another amount. What section is that going to go in? The fact that I paid a cash dividend, operating, investing, or financing. Financing, good. Giving money back to my owners or creditors. If I were you, I'd put a little F beside that to indicate that's going in the financing section. Common stock was issued for cash. What section is that going to go in when I issue common stock? Operating, investing, or financing? Financing, good. When money comes into our owners or creditors, I put a little F by that to indicate it's going to go in financing. Machinery was purchased for cash. What section will we report it when we buy machinery? Operating, investing, or financing? Investing, very good. Investing, buying and selling property, plant, and equipment, non-current assets, property, plant, and equipment, and investment. Notes payable were issued to borrow money. When we borrow money, what section does that go in? Operating, investing, or financing? That goes in financing also. How are you going to put a little F beside that? Now, everything in these notes is already included in the data above. These are just friendly little reminders to say, oops, don't forget about this. So every time you see a note, you need to say thank you, because they didn't have to tell you that. They're just kind of prodding you to make sure you don't forget something. Remember, when we do the operating section, we really have two different groups of items there. The first is what I call my skinny girls sentence. Let's review that. If I were you, when I approach a problem like this or a test, I would write that sentence down and what it stands for, because then we can just look back at it. So skinny girls are dancing at luau's. Skinny girls are dancing at luau's. What does that stand for? The S stands for what? Subtract. What do I subtract? Gains. Subtract gains. A stands for what? Add. What do I add? Depreciation expense. Add depreciation expense. What's the A? What do I add? Amortization expense. This is a review. We depreciate tangible assets like building, furniture, equipment. We amortize intangible assets. The concept is the same. What does the L stand for? Losses. Now, folks, if I got a problem on the test, one of the very first things I would do is on the back of another page, I would write all that down. Then I don't have to think so much. I can look at what I wrote down. I'm going to subtract gains. I'm going to add depreciation expense, amortization expense, and losses. What did we find in the data I gave you that falls in the skinny girls group right there? Do we have any gains or losses? No. Do we have any depreciation expense? Yes. And do we have amortization expense? No. Amortization expense is going to be very infrequent. If I had my way, I probably wouldn't mention it, but I throw it into a homework problem. So I have to mention it also. Gains and losses are going to be common. Depreciation expense will be there for every problem. So we have depreciation expense. That made my net income go down, but did not require that cash be paid out. So what are we going to do with that in the operating section? Will we add it or subtract my depreciation expense? We're going to add it. Good. It made my net income go down, didn't require that cash be paid out. And I believe that's all we had in this category. Now, I want to kind of prepare you for some homework. For example, problem 1A has an example. They don't give you the whole income statement. But in the note somewhere, you look and see that we had an account called investments, and the investment account had gone down by $90,000. In the notes, they tell you that we sold investments for $105. Sold it for $105. You see the investment account went down by $90. In other words, we sold investments that cost me $90,000 and I sold them for $105. Gain or loss on that transaction? Gain. If I sold them for $105 and they cost me $90, I have a gain on that transaction. So sometimes you have to read. If they don't give you the whole income statement, you've got to read and see if you have any gains and losses. So in this case, depreciation expense we're going to add. The next items are my changes in my current assets and current liabilities. I told you I've tried lots of different ways of teaching this. Complicated long sentences. Instead, the simplest way I've come up with is to say that current liabilities work the way we expect. How do we expect? We expect to add an increase and subtract a decrease, right? That's what current liabilities do. So, current assets, on the other hand, do the opposite of what you expect. I'm going to write that on the board because I would write that down when I got a test given to me also. So, let's do current liabilities. So, if we have a current liability that increases, current liabilities work the way we expect. What will we do with a current liability increase? We will add it. How about if we have a current liability that goes down? Just the way we expect to subtract a decrease. Current assets, on the other hand, do what? They work the opposite. So if we have an increase in current asset, we don't add it. What do? We're going to subtract it. And finally, current asset decrease. What are we going to do with that? Again, if I were you and somebody handed me a test or a homework problem to do, I would write all those down. And then I don't have to think so much. I can just come back and look at what I just wrote. Let me record the rules here. For current assets, what are we going to do? What are we going to add for current assets? An increase or a decrease? A decrease. And what are we going to subtract? An increase. We're going to ignore cash. It's my final check figure. Accounts receivable increased. Accounts receivable is the current asset and it increased. Let's look at what we wrote down. Current asset increase. What do we do with that? Add or subtract? We're going to subtract. Now, I always like to come back and remind you of why we're doing it that way. If accounts receivable went up, well, basically, I loaned somebody some money. For my receivable to go up, I loaned somebody some money. When I loan someone some money, cash goes out, and I'm going to subtract. What's the next current asset that we had back on our sheet with all the accounts? Merchandise inventory. Merchandise inventory went down by $2,000, didn't it? Merchandise inventory is a current asset. It went down. Current asset decrease. What do we do with the decrease in the current asset? We are going to add it. The logic behind that, if merchandise inventory went down, we must have done what? Okay, must have sold it. Exactly. When I sell it, cash comes in, and I'm going to add it. Current liabilities. Current liabilities, what are we going to add? An increase or a decrease? An increase. And what are we going to subtract? A decrease. Accounts payable decreased. All right, a current liability decreased. Look at what we wrote down. What do we do when a current liability decreases? We subtract it. And again, why is that? For accounts payable to go down, we must have paid it off. When I pay it off, cash goes out. We're going to subtract. What was the other current liability we had in this problem? Salaries payable, and it decreased. A current liability decreased. Current liability decreases. What do we do with that? We're going to subtract it also. Again, for salaries payable to go down, I must have paid it off. When I pay it off, cash goes out. We're going to subtract. So what would I do when I get a test or a homework problem? I would write those down first off. I would go looking for all the skinny girls items, which are depreciation expense, amortization expense, gains or losses. Then I would go back to my current assets and current liabilities and decide whether I'm going to add or subtract them. The next thing I would like to do is to go and fill in the operating section. And let's now take the information that we have come up with and prepare my operating section. The operating section starts with what? Net income. Now we have two columns for numbers. For right now, everything's going to go in that far right column. Nothing magic about the columns, just like back in chapter 1, adding or subtracting one beneath the other with nothing in the middle. It's the whole thing. So we're going to start off with the net income. And now we need to list any of the skinny girl items that we have. Gains or losses, depreciation expense, amortization expense. What do we have that fell in that group? Depreciation expense. Okay, now we're going to add that. Now if we're adding a number, we're just going to write that number there. If we're subtracting it, we're going to put parentheses around it to indicate that it is deducted, but it is subtracted. This is the only one for my skinny girls items. Gains, losses, depreciation expense, amortization expense. Then we need to go looking at the changes in current assets and current liabilities. I believe the first current asset we talked about was accounts receivable. Now in the operating section, I do want you to write these words: increase in this current asset or current liability, and then decrease in, whatever it might be. So increase in and decrease in. This is the only place those words are going to appear. We had an increase in accounts receivable, and so we had decided to subtract that. Do you see the parentheses I have around the number 5,000 then? Merchandise inventory. We have a decrease in merchandise inventory, and we were going to add that. Decrease in salaries payable. We need to subtract, again, put parentheses around it. And finally, decrease in salaries payable. Again, I'm going to subtract that. And that's everything in my operating section. So I'm going to take 4 plus 3 minus 5 plus 2 minus 4 minus 1. And we come up with our net cash flows from operating activities of a negative $1,000. Now the fact that that's a negative number tells me that more cash has gone out than came in. Would you like for that to be a positive number or a negative number right there? Positive. Big or small? Big. This is my cash flows from normal day-to-day doing business. We'd like for that to be a positive number. We'd like for it to be big. The machinery account. During the period, what happened to the machinery account? Did it go up or go down? It went up. For machinery to go up, what must have happened? We bought more machinery. You probably don't need a journal entry for this. I'm going to do one. Just humor me. You don't have to do it. It's just a tool to help you. During the period, machinery went up $8,000. Machinery is an asset. Assets go up with a debit. So I'm going to do one of these mock journal entries. Again, the real journal entry has already been recorded on my books sometime during the year. I am now just coming in after the fact, trying to figure out what already has been recorded on my books. So in my pretend journal entry, I would debit machinery. Nothing related to that. The next step says to make it balance, I'm going to have to do what to credit to cash? Well, I'm going to have to credit cash. How much cash did I pay for machinery? $8,000. Did you need a journal entry for that? Probably not. You probably do not. If we paid $8,000 cash to buy machinery, what section of the statement of cash flows will we put that in? Operating, investing, or financing? Investing. Will that be an inflow or an outflow of cash when I buy machinery? It's going to be an outflow. Common stock and PIC in excess of par. Both of those accounts went up. What must have happened for common stock and PIC in excess of par to both have gone up during the period? We must have issued stock. We issued more stock for more than the par value. Now, remember I said this chapter pulls everything together we've been doing from here, there, and yonder. We're pulling a lot from chapter 9. This is pulling us back from chapter 11 to make the journal entry to record issuing stock. We debit cash for what we get. We credit common stock for what? The number of shares times the par value. The extra amount goes to PIC in excess of par. Well, I'm going to do that pretend journal entry. During the period, common stock went up, $9,000. What type of account is common stock? Stockholders' equity, capital or equity, and it goes up then with a credit. So in my journal entry, I'm going to credit common stock. In addition, as part of this same transaction, PIC in excess of par also has gone up. Part of capital or equity again, paid in capital, PIC, paid in capital or equity, and we're making it also go up then with a credit. So for my journal entry, this one's going to have two credits. Let's skip the debit. We'll come back to it. We need to credit common stock. We need to credit PIC in excess of par. To make it balance, step 3 says plug cash. How much cash must I have gotten for issuing stock? $13,000. Now notice we're not going to report the 9 and the 4 separately. We got $13,000 cash from issuing stock. Not 9, not 4, 13. So we received $13,000 cash from issuing stock. In what section of the statement of cash flows would I record that? Operating, investing, or financing? Financing. Money coming in from our owners in this case. It would be an inflow. Money's coming in. We're going to add that. Notes payable. During the period notes payable went up. For notes payable to go up, what must have happened? We borrowed more money. We borrowed more money. We signed a promissory note and we borrowed money. When I borrow money, cash is going to come in. Now really, you probably don't need a journal entry to figure out how much cash I got from issuing that note, but humor me, I'm just going to illustrate the process to you. During the period notes payable did what? It went up. Notes payable is a liability, it went up. Liabilities go up then with a credit. We don't have any related accounts in this case, so we're simply in my mock journal entry going to credit notes payable. Step 3 says plug cash. If we have a $2,000 credit to notes payable, how much must we debit cash for to make it balance? $2,000. So how much cash did I get from issuing that promissory note? $2,000. Could you have done that without a journal entry? Sure. I just want you to see the process for when you choose to use it. So we borrowed $2,000 cash by issuing the promissory note. In which section of the statement of cash flows will we record that? Operating, investing, or financing? Financing, good. And that's going to be in inflow. When I borrow money, cash is going to come in. What I'd like to do is to go back to the very first page where we had all of our account balances. I think we finished our statement, or at least analyzing everything we need to, but let's make sure we haven't overlooked something. First off, the change in cash and cash equivalents. Have we addressed that yet? We really haven't. When we finish doing our statement of cash flows, when we add up our operating, investing, and financing sections, they should all add up to a $3,000 increase in cash. The change in accounts receivable, have we thought about that yet? In what section do we think about that? The operating section. The decrease in merchandise inventory, have we talked about that already? In what section? Operating, good. How about the increase in machinery? Have we talked about that already? Yeah, what section is that going to go in? Investing, good. How about the increase in accumulated depreciation? Have we talked about that? Not really. Not really. Well, let's think about that. I mentioned it at the very beginning, but let's think about that. What makes accumulated depreciation go up? Every year when we make the adjusting entry, we debit depreciation expense and credit accumulated depreciation. But every year when we make the depreciation entry, we debit depreciation expense and we credit accumulated depreciation. So that account goes up by the current year's expense. What makes accumulated depreciation go down when you dispose of an asset that has some depreciation? Well, let's think about our situation here. We began with 1 in accumulated depreciation. How much depreciation expense did we have this year? Depreciation expense was 3. So we began at 1, we had 3 expense this year, so we ended at 4. What if we had ended at something less than 4? What would that tell us must have happened? We must have sold some item that had some depreciation. So right now, the increase from 1 to 4 in accumulated depreciation is simply because we had $3,000 depreciation expense this year. I mentioned that because on a problem, they can leave things off. Matter of fact, on the first one that we're going to do, they don't tell you depreciation expense. You have to analyze the accumulated depreciation account to tell that. But now we know why accumulated depreciation went up in this case. It went up by 3 for this year's expense. It didn't go down from disposing of any assets because we didn't dispose of any. I should tell you, every homework problem and cash flows is different. You know, with most things we do, they're kind of all alike, quite honestly. Every cash flows problem is going to be a little bit different. They're going to throw something into one problem that they didn't throw into the previous one. And just when you master that new item, they're going to throw something into the next one. So be prepared. They all are a little bit different. For example, in this problem, I didn't have selling any fixed assets, did I? I could, and that would be another complicating factor. I didn't have dealing with dividends payable in this problem either. other complicating factors we can throw in. Accounts payable, did we talk about the change in that account already? Yes, we did. In what section? Operating, investing, and financing. Operating, good. How about salaries payable? Have we talked about the change in that account? Yes, in what section? Operating, good. How about notes payable? Did we talk about the change in that account? Yes, what section are we going to put that one in? Financing, good. Borrowing money is financing. Common stock and PSC in excess of par. Have we talked about the change in those accounts? Yes, we have. Those are going to go in my financing section. Retained earnings. Have we talked about the change in retained earnings? We really haven't. Well, let's think about retained earnings for a minute. What makes retained earnings go up? Net income. Okay, having a net income makes it go up. What makes retained earnings go down? Net loss, very good. And we didn't have that, so we'll forget about that one for right now. What's the other thing that makes retained earnings go down? Dividends declared. Dividends declared. All right, so net income makes it go up, net loss makes it go down, declaring a dividend makes it go down also. We had $5,000 beginning retained earnings. Did we have a net loss or net income this period? Net income, what was it, $4,000? Exactly. If nothing else had happened, if we had not declared any dividends, my ending retained earnings would be $9,000. My ending retained earnings actually is how much? 6. Well, since it didn't end at 9, it only ended at 6, I must have declared how much in dividends? 3. Now, if you'll notice, I even told you that on the notes. Did you see that? I told you dividends of 3 were declared and paid. Did I have to tell you that? No. If I wanted to be mean, I could leave that off. I could leave that off and make you work backwards and figure it. But in this case, we know all the pieces. We know my retained earnings went up by the amount of net income. It went down by the amount of dividends declared. I declared $3,000. Does that mean I always paid $3,000 in dividends? No, I might have paid 20 or I might have paid 1. We have to look at the dividends payable account, which in this case I didn't include, so we declared and paid 3 in this case. We're trying to keep it a little simple for starters. How about on the notes? Let's make sure we didn't miss anything there. Cash dividends of $3,000 were declared and paid. We really haven't talked about that one yet because we didn't have to figure the amount, but what section are we going to put that in? Operating, investing, or financing? Financing, good. Have we already talked about issuing common stock for cash? Yeah, we already picked that up in financing, good. Have we already talked about buying machinery? Yeah, what section we decide that goes in? Investing, good. And did we already talk about issuing notes payable? Yeah. So do you see what I've done? I think I've figured up all the pieces to my puzzle on cash flows. I'm going to go back and look through all my accounts to make sure I didn't overlook something. Okay. These notes, do you see where everything on those notes, I didn't have to give you those notes. Do you see every bit of that we kind of figured up without looking at the notes? But the notes are a reminder. When you're finished, go back and read them. Make sure you didn't forget something because it's easy to overlook. Let's finish up my statement then. Operating, we've already ended up with a negative 1,000. Let's do investing. We only had one item that was to show in my investing section. What was that? The machinery, good. Now, I want you to notice here, I'm no longer writing the words increase in or decrease in. I'm writing words that are kind of, I think, good plain English, make good sense. Cash paid to buy machinery. Everything in investing and financing is going to be good plain sense English. Cash paid to do this, cash received from doing this. Now, when money's going out, I want you to put parentheses around it. Your book does not always do that. Sometimes they will simply say less something and leave the number positive, and I find that confuses students greatly. Although the homework solutions are sometimes like that, I want you to put parentheses around anything you subtract. I think it makes it a whole lot easier. That's the only item we had in the investing section. 2 columns. This is just going to be for the details and the total. Nothing new about the columns. If we're adding numbers together one beneath the other, they just need to have nothing stuck in the middle. Financing section. Tell me what's one thing we had in financing. How about the common stock? Again, write plain English. Cash received from issuing common stock. That's a positive 13,000 cash comes in. The next item we talked about was issuing that note payable. So we have cash received from issuing a note payable. Again, notice the words, just plain English. Cash received from, cash paid for. And then we had one more item to go in my financing section. What was that last item? The only one we didn't have to calculate it because I gave you the amount. The dividends, cash paid for dividends. We'll put parentheses around that because that is an outflow. And I gave you the amount there. I could have complicated that. I could have told you the beginning and ending balance in cash dividends payable and had you figure that amount then. So for financing, I've got plus 13 plus 2 minus 3. My overall cash flows from financing activities then are a positive 12,000. So now we finished all 3 sections, operating, investing, and financing. It's the moment of truth. We add them all up. Minus 1, minus 8, plus 12 adds up to $3,000. In this case, it's a positive number, so that is an increase in cash. Will it always be an increase in cash? Not necessarily. We hope it would be. We'd like for that number to be positive. We'd like for it to be large. Okay, but it isn't always that way. Now I want us to stop right now. We ended up with a $3,000 increase in cash. What is the only reason that that ended up being a positive bottom line number? What section made us end with a positive number instead of a negative? Financing. I think probably the most important of those sections is the operating section. That is my cash flows from normal day-to-day doing business. Now in this example, I'll let that be a negative number, which says my normal day-to-day doing business ended up with more cash going out than came in. The only thing which kept me in a positive position is because I issued stock, really. So you need to look at the individual components of each item there too. 3,000. Have we seen that number before? Remember when we started, very first line said cash, and I had you right beside that. That's my magic check figure. Those add up to a positive 3,000. If it added up to anything other than a positive 3,000, that means I've done something wrong. If I've done something wrong, we need to go back and see if we can find our mistake. At the very end of the statement, we want to prove to the world that we got it right. We're so proud of ourselves. We want to prove that. We're going to take the amount of the increase. To that, we're going to add my cash at the beginning of the year, and that should equal my cash at the end of the year. So we have an increase of 3 plus the 12 equals 15. If you go back and look at the beginning, you're going to see that my ending cash actually was $15,000. So the $3,000, that's my check figure. That's a good sign. And that's our first complete statement of cash flows. I think statements of cash flows are overwhelming at first. The first one you do, when you try to start, you're just kind of like, I don't know where to even start. But that's okay. They will get easier the more than you do. I promise. I do promise that. How do you approach a cash flow problem? If you look at pages 26 through 33, it will outline there step by step what we did, plus some extra little things that maybe we didn't encounter in this problem. I would keep that in front of you when we go to do one. When you get overwhelmed, it's pretty methodical, step by step. That's how I would go about it then.